Although Palantir stock has been rising in the past couple of days and the company has seen some positive developments in recent weeks, including a new 2-year contract with the NHS and the renewal of a previous deal with the US Army that is valued at about $114 million per year. After doing a video on the 3 reasons why Palantir will crush 2021, today we will flip the coin and look at the 5 reasons why Palantir stock might crash in 2021. Looking at the 5 factors challenging Palantir stock price and pressurizing the stock to go down. Thank you guys so much for clicking on today's video. I am Ali with a bachelor's degree in finance. Please don't forget to like the video down below, subscribe to the channel, and before further ado, let's get into our content. And we have a lot to cover today. The first reason why Palantir stock might crash in 2021 is that a lot of analysts have turned bearish on the stock. They believe that Palantir is highly valued with a market cap of $40 billion. It's up around 2.5x since its IPO in late September, and trades at a 40x multiple of future revenues of 2021. The second reason why Palantir might crash in 2021 is the end of the IPO lockup period, through which insiders are forbidden to sell their holdings. The lockup period will expire in mid-February. Palantir went with a direct listing to enable its insiders to sell 20% of their holdings. They will be free to sell the rest of 80% of their holdings after the lockup period expires, boosting the supply of stocks and hence putting downward pressure to the stock price. The third cause that might put downward pressure to Palantir's stock price is the shares selling of Carp. On Monday 4th of January, Carp sold 30 million worth of Palantir shares at the price of $23. My previous video was about this topic and I'm gonna put the link down in the description below if you wanna watch it. The point is that Carp still owns 80% of his shares of Palantir, hence you my investor friends should not be worried. However, he might decide to sell any of his shares in 2021. The fourth reason that can push Palantir's stock price in a downward spiral is the historical poor operating numbers. Up until Palantir's recent IPO, the company had shown traditionally very poor operating metrics. For example, in 2018, the company lost $623 million, while bringing only $595 million in revenues, so the loss was larger than their revenues. Last year was barely better with revenues reaching $743 million and an operating loss of $576 million. Even though Palantir has grown a lot in the past quarter, you have to keep in mind where it came from. And finally, the fifth reason why Palantir stock might crash in 2021 is that George Soros fund is selling their shares. He plans to sell his full stake of the analytical data company Palantir because he does not approve of its business practices. That's why he decided to liquidate his Palantir's position with a huge return. Hence, if you guys also don't approve of Palantir's practices, don't invest into Palantir, or if you have already, consider liquidating your position. Guys, when looking at Palantir or any company, we have to analyze the challenges that can push the stock price down. Thank you guys so much for watching today's video. Please don't forget to like the video, subscribe to our channel, and if you guys believe that there's a challenge that I haven't mentioned in this video, please write it down in the comments, and see you guys in my next video.